Hi, in this video we're going to discuss two very effective ways to trade Ethereum, to time the Ethereum market. And you will get two specific strategies, one of them for long-term trading, so for buying and holding Ethereum over several days, maybe several weeks, and another strategy that's more for the short term, to find profitable entry and exit points. So first of all, why do we have two strategies? Look at this chart over here. This is an Ethereum chart, but I have intentionally left out any time scale or any price scale over here. So you can't really say over what kind of time period this chart here is plotted. So make a mental note of the structure of this kind of price movements. Do you think this is a short-term chart, so maybe a day or two? Or do you think this chart is showing several months? And now compare this chart to the next one. Okay, so this is the second chart. So one of those charts spans over several months, the other one only over 1 day. And can you guess which one refers to what time scale? The reason why I make this little quiz is to kind of sharpen your eye to the structural differences in price movements among different time scales. So let's reveal this. So the second chart you have seen is only a few hours of price data. So you can observe there's quite a lot of volatility, a lot of quick up and down relative to the price movement itself, right? So there's not a lot of trend movement going on here. It's mainly quick random noise around something that looks like an equilibrium price, right? So if you were to trend this actively, you might consider to buy whenever a price is relatively low, and you might want to sell whenever it is relatively high compared to simply what happened before. So on the short term, it looks like price movements, they revert to some kind of mean, right? They have these short-term extensions, but in the end, they somehow hover around a stable price. Now, on the other hand, when you compare this to this chart over here, even if you zoom out even further, what you can see is much more trend movement, relatively speaking, right? So you have these trends, and the volatility, those random shakiness around a price, is way less pronounced compared to the trend movement. So once you look at several months of data, you have a chart that spans several months, it seems to make more sense to follow the trend. So to kind of do the exact opposite, right? When the prices decline, they tend to decline. When the prices, however, start rising, they tend to continue to rise. So you don't want to necessarily sell here because the price is just, relatively speaking, high compared to the past, because we just might kick off another trend. So it's the exact opposite way you would trade over the long term. Over the long term, you want to follow trends. Over the short term, you want to make use of those exaggerations in price movements. And so when we look now at trend following, right? What is a very simple, straightforward way to follow trends? It's by using moving averages. So you could draw a moving average simply like this, and you can adjust the length of this moving average. So this is now the 39-day moving average. You could increase this to your liking. And what you notice is that the moving average itself, it smoothens out, right? It's not as close to the price anymore. And one very straightforward way to trade this would be to simply say, okay, I want to be in the market whenever the price is above the moving average, and I want to be outside of the market whenever the price is below the moving average. And what you notice is that you want to have a moving average duration that kind of distills those positive and negative trends in a perfect way. So if you increase the duration over here, you kind of eliminate those wrong signals. If you have a moving average that's too short, you would buy into the market just to simply see the price dropping again. And you have these wrong signals over here. So when you're too close with the moving average, the signals are not very useful. If you are, however, too long on your moving average and you have a lot of days that you average out, what you notice is you don't have these failed signals here anymore, but you also enter the market quite late when the prices are increasing, right? You're basically missing out on price increases like this, 60%, and you're also exiting very late when the price drops. You see here in this case a 37% drop. So you want to find out the perfect duration what kind of moving average is perfect for trading a certain asset. And instead of just randomly trying to figure this out by changing the duration here and not really knowing what we're doing, we can actually backtest this. We can backtest a strategy of what kind of performance would we get if we buy above the moving average and we completely sell below the moving average. And we can do this kind of test for any moving average and find out, historically speaking at least, what would have worked best for Ethereum. And so here's the result of one of those backtests. This is for the 23-day simple moving average. And what you can see in this chart is in purple, the moving average, in white, the asset's price, so the Ethereum price, and in gray, you see the portfolio line. And so just by looking at this chart, we can see when the price falls below the moving average, we get outside of the market. We are completely in cash. And so the portfolio line is completely flat. And then once we go above the moving average again, we are inside the market. We follow the prices of Ethereum. And so when you backtest this, you can see for the 23-day moving average, we would have gotten a better performance than simply buying and holding Ethereum. What we can also notice is that the very bearish movements, this incredible bear market here that happened in Ethereum where we lost more than 90% of value, those kinds of phases in the market, they get weakened, right? So we don't lose as much when prices go down, and we seem to still win more or less the same amount of money when prices go up. So really it's more kind of like a loss minimization strategy than a proxy maximization strategy. So this is for the 23-day moving average, and now this is for the 39-day moving average. We see a pretty similar end return. If you compare this, I'm now flipping back and forth between those results, and you can see the 39-day moving average, it's not as close to the price. It generates less trading signals, but we still get a fairly good end return. And so now you might wonder, what's actually really the best moving average here? And the ones I showed you are actually the best moving averages. This is the overall result. So you see over here the moving average duration, and then in the second column, the return per annum that we would have gotten by trading according to the moving average. These simulations, by the way, they don't account for any trading fees, right? It's simply follow the asset's price movements when the price is above the moving average and stop following them when it's below the moving average. So there's no trading fees here involved. And the reason is we simply want to know what moving average actually creates the best signals. We don't really want to know if we follow this kind of strategy strictly, what performance would we really get? Because in the end, you're probably gonna look at more factors when trading Ethereum than simply a moving average, right? That's very simplistic to just do it this way. But to find out what moving average is the best for describing price patterns, it's probably best to ignore all trading costs. So the 23-day moving average is the best, 166% per annum. The 39-day moving average is the second best with 144, or at least in this kind of range duration, right? And what we can also see here in the second columns is the maximum drawdown. If we would have just bought and held Ethereum, you would lose from the top of your portfolio line to the bottom 90%. So the bear market really puts a toll on your portfolio. But if you trade according to those moving averages, that kind of maximum drawdown is way less. So that's this over here, right? Buying and holding, pretty bad. Trading, not so bad. And so that's my long-term strategy for following trends in Ethereum. I look at two moving averages, the 39-day moving average and the 23-day moving average. And you might already be able to tell which one is which. The one that's closer to the prices is the shorter duration moving average. So here in light blue, we see the 23-day moving average, and in dark blue, the 39-day moving average. And so that means right now we are very bullish for Ethereum. It looks like prices tend to rise right now. By the way, this kind of strategy is not something that I've just invented. I basically launched this channel with that strategy. Look at the very old videos. I've already presented exactly those two moving averages. So I actually used this signal over here to buy in, and I'm pretty happy with that. I also posted this signal in our Telegram group. So in case you want to get an update whenever these kind of signals get triggered, you can simply join our Telegram group over here, the Bitcoin Strategy channel. The link is in the video description below. Or you can also simply, within Telegram, search for this term, Bitcoin Strategy Channel, and you will find us. We are currently around 200 people in that group, would be great to see you join there as well. So yeah, there you have the very first trading strategy, following the trends. You can also see, obviously, we have backtested this, but there are wrong signals, right? So we might break through both of those moving averages, but actually not directly rise in prices afterwards, right? There are wrong signals. We exit the market here again, we enter here again. So this strategy obviously is not perfect. And there's even some kind of leeway, right? Are you going to sell and trade according to the 23-day moving average, or do you take the 39? It's pretty much up to you, because the backtesting results, they are very similar. So no strategy is perfect, but at least historically speaking, if you are using moving averages, this is definitely, in my humble opinion, the best way to do it for Ethereum. Plot the 23 and the 39-day moving average and get into the market when those moving averages get crossed. Now, what's the short-term strategy? This is now the long-term strategy to follow trends, right? But we said for the short term, prices tend to fluctuate around some kind of equilibrium. They tend to break out and come back again. So instead of buying when prices rise, you might be selling when they short term spike up, and vice versa. When they very quickly drop, you might be buying. So what can we do during the short term to find a real good short-term buying signal? Okay, let me show you that. And thanks, by the way, for the like if you've already done that. In case you haven't yet, this is obviously your opportunity now. So here we go to the short-term trading strategy. So I have now switched the chart to 1 hour intervals. So we're not looking at one tick being a day, but at one tick only being 1 hour. And then instead of using moving averages, because those follow trends, I like to use an indicator that shows overbought and oversold territory. And that's the RSI, the relative strength index. That's this chart here at the bottom. So on tradingview.com, you just click here on F and type RSI. You click on here, you get this chart over here. And what you can see here is an orange dotted line here. This is the alert that I trigger. I'm going to show you this afterwards. But here the idea is basically you want to buy, you want to get into the market whenever the RSI is below a certain threshold. So the backtest I did with that indicator is to check if you are DCAing into Ethereum, right? Your thesis is that over the very long term, Bitcoin, Ethereum, they are going to rise with time. And you want to buy regularly into the market. You want to DCA into the market, dollar cost average. What you can do is obviously simply just buy on the first of a month, right? Every first of a month, you have your certain amount. You purchase for the price that you have been given, and you basically don't really care about the price at that exact point in time. Now that's one approach, but I think it's suboptimal, because if you backtest the RSI's performance, you can find out there is a way to get prices that are better than just randomly picking a price on this line, right? You can find times where on average prices are cheaper. And so the way to do this is you look at the RSI and you set a certain threshold. So let's say in this case, the threshold is 20. And you would always purchase whenever the RSI falls below that threshold. So if we look, for example, at this price over here, we would have bought on the 19th of May at 11 o'clock for this price over here. And if you just compare this to the overall chart, this wouldn't have been too bad of an entry point, right? We would have gotten a cheaper price than before. We also would have gotten a relatively cheap price compared to what happened afterwards. And if you go through the whole price history of Ethereum, you can notice that these kind of buying signals, they tend to be relatively good. They tend to be better than just randomly buying, say, on the first of a month. And so what I've done is I have backtested this. I have compared the average price of the entire data set of Ethereum. So that starts since the beginning of 2020. I've compared the average price of Ethereum during that time with the average price of a subset of that data whenever the RSI was below a certain threshold. So I would look at the prices over here, and I would look at the prices over here, and I would compare this with the average of all of the prices in the data set. And if you find out that the subsets of data, whenever the RSI is low, show lower than random prices, then we know we have a good indicator over here to use this for dollar cost averaging to get cheaper prices short term. And so here's the result of that backtest. And we can see whenever the RSI is below 25, we tend to get cheaper prices than average. So the price, whenever the RSI is at 20, tended to be 40% lower than the price in the overall data set. And the lower we go on the RSI, the better. The problem though is when you go too low on the RSI, say to 10, you tend to get very few buying signals, right? When you draw this line over here at 15 or so, you can go back a lot in time. You get very few buying signals. So it's not really useful for dollar cost averaging to go too low on the RSI. If you look just at the quantity of buying signals, 20 seems to be a good trade-off of the number of signals we get and the discounts we get on the price. So I tend to buy Ethereum whenever the RSI is at 20 or below. And so the last signal we got was on the 20th of July. And we can see, obviously, in this case, this would have been a phenomenal buying signal. But we can also see other buying signals. They are maybe not as good, right? We got one signal over here. We got another signal over here. But still, comparatively speaking, if we backtest this indicator seems to work. It seems to be better than just simply buying on the first of every month, for example. Now, the problem here is that this is not as easy to time compared to the trends, right? The trend strategy was just a daily moving average. You can basically just check at midnight UTC time. Am I now below or above the moving average and then buy or sell? For this strategy here, you have to look at the chart every hour. And who really does this, right? This is not as practical. So what you can do in TradingView, if you've got the Pro account, is to create an alert and you can select a condition. If the RSI is less than 20, then send me an email. But if you don't want to set this up, again, simply join the Telegram. I also post whenever the RSI falls below that value. So then you can consider to get into Ethereum, or you might also choose to ignore that buying signal. Now, one interesting thing about this backtesting result is also this curve over here. This is not intuitive. When the RSI is very high, we also seem to get lower than average prices. So whenever the RSI is, say, at 80 or above, or maybe even 75, then the prices seem to be better than if we were to buy just like in the middle range here. And I was wondering, why is that? This is not intuitive at all, right? When the RSI is high, shouldn't the price also be comparatively high? Shouldn't this be a pretty bad buying signal? So let's say we set now the upper band to 80 and we would always buy whenever the RSI is at 80 or above. Why would this be a good entry point? And I think what comes here into play is the first strategy, the trend following. It looks like when the RSI is really high, what tends to happen is that maybe the trend has already been kicked off. If we look, for example, at the recent pump over here, what preceded this pump was a very high RSI. So we shot up in price quickly and that restored confidence, and so we picked up momentum and continue to rise. This obviously does not always have to happen. Here we've got another signal. We did go up slightly a bit afterwards, but historically speaking, at least that's what the backtesting says, these signals seem to be working somewhat as well. When the RSI is extremely high, we tend to have picked up enough momentum to continue rising. So that's interesting, right? You can buy whenever we are super depressed, when we crash quickly, or you can buy when we shoot up very quickly. Both of those strategies, they seem to generate maybe some kind of attention on Ethereum, which leads to increased demand, which leads to rising prices. That's how I kind of interpret the result of that backtest. If this was all a little bit too complicated for you and you just want to know, should you buy Ethereum right now? In general, things look positive, right? We are above the statistically, historically most important moving averages. So we are bullish. It looks like the price tends to continue to rise. On the other hand, if you want to really time this very well, then you might want to wait either until we shoot up quickly again or until we drop quickly again, because right now we are not in any extreme value on the RSI. So simply watch this indicator on the hourly chart and buy whenever we are, say, below 20 or above 80. If you enjoyed this video, feel free to subscribe. I publish videos at least every other day, not just theoretical videos like this, but also individual altcoin analyses, trying to find out when is it a good time to buy and sell a certain altcoin. Also, if there are any new backtesting results for any other indicators, you also might not want to miss those. And the issue is that those videos, they tend to get less clicks. People don't really search for Ethereum backtesting indicator or something like this, right? Those videos, they mainly get presented to the current subscriber base, so they might not pop up in your feed. So yeah, just simply go ahead, hit notifications, and you can then still decide if you want to watch it or not. And last but not least, I would obviously appreciate if you could comment below to basically show YouTube that this video is worth watching, to let it rank higher in the algorithm, that it does get some kind of exposure. This would be very much appreciated as well. Thanks again for liking, and see you next time. Bye bye.